Okay. Uh, in this practice marathon session, the mainly ideology is to guide you guys how to attempt the paper, how to attempt the question, uh, what should be part of the question, how you guys should approach the paper, how you guys should approach the answer. This is mainly the ideology which we are going to guide you in the today's session and the tomorrow's session. So uh, let's start today with directly the question which will guide me how to attempt it. But before I start attempting the question element, I hope you guys would be aware with the paper format, the marks distribution, the main themes around the marks distribution. Or let me have word on those lines at the start first. Just to share with you. Just to share with you. ATX paper, like other papers, it is of 100 marks. Out of these 100 marks, 4 marks are your professional marks. Professional marks, like if you are supposed to write a memo, you are supposed to write a letter, you are supposed to write a report, you have to do it accordingly, right? The 5 marks is for ethics. The principle relating to ethics are same, like integrity, the ethical threats to independence, all of these things remains the same. Just capacity to think would have changed. Like here in the ATX, the capacity would be a tax advisor, a tax consultant, kind of a stuff. Otherwise, the basic fundamental stuff remains the same. Then on average, 5 marks, which can go up to 10 marks relating to VAT, 5 marks in total, which can go up to 10 marks relates to VAT. So if you guys notice, somewhat like 14 odd numbers are distributed in other, like I include VAT as another area, and rest of the marks, as in like your 86 marks relates to the pure taxation related knowledge. In this 86 marks, I'm talking about VAT, I'm talking about capital gains, I'm talking about inheritance, corporation tax, income tax, all of the topics, right? Including the tax planning element as well. So this is how the marks is breaked up. Normally, we do not give a good emphasis on these marks, these 9 marks. So if we give a good emphasis on these 9 marks also, our chances of success quite increased, because I'm just sharing a stats. Like for example, if 100 students appear in the ATX exam, 100 students appear in the ATX exam, let's suppose 60 got flunked, unable to clear, 40 managed to pass. I'm talking about this based on the average pass rate. If these 60 are flunked, approximately 30, not 30, not percent. Okay, allow me to write it in this way. Approximately 50% are in the range of below 40 marks, whereas 50% are in the range of 41 to 49 marks. So if they could give a provide a good emphasis on these professional marks, on these ethical marks, obviously this enhances the chances of success. So give it a good proper respect, do give a time properly on how to earn the professional marks, how to get the ethical marks. uh, that's it. That's what, as an starting point, I want to say, because normally people do not give a proper respect to these professional marks and these ethical marks. Okay. uh, let's start the question which will guide me how to attempt the question, especially the section A related question, how to attempt that. Okay. So I'm heading towards the CB practice platform. So I have opened up the Google in front of me. This is the ACCA homepage. Past exam paper. ACCA qualification. ATX CB practice platform. Log into practice platform. Uh-oh, sorry. I hope you guys would be familiar with this screen, with this page. If not, kindly do make yourself familiarize with this screen, please. Advanced taxation. UK variant. ACCA official resources. Past exam library. Do assign all of the past exam library to yourself, except of the first one, which is like ATX UK December 20, because this paper is based on the previous Finance Act, the Finance Act of 2021. So if you guys attempt this, you try to reconcile your answer. If it does not match with your solution, you will be confused. So to avoid that confusion, and at the moment, considering the time, the limited time we have, we can't afford the confusion. So do assign only 3 papers to yourself. June 21, these 3 papers. Past exam paper, all of the past exam paper, and specimen paper. Okay. I'm going to start from the uh, practice exam paper, and I'm going to start this practice exam 3. Not 1, not 2. 1, 2 is for yourself. I'm going to start with the practice exam 3. Okay. Uh, practice exam 3. So should I start the question, or is there anything any one of you want to ask or want to comment? I'm happy to hear that. Is there anything which any one of you want to ask? Any one of you want to comment? Please do let me know. I hope you guys are with me, listening to this. So, noted your comment, Abdul Kadir. There is a there is an ideology to Abdul Qadir. There is an ideology behind this suggestion, and the ideology is like the 35 marks question is a lengthy question. So normally, what the students do is if they uh, if they try to cover that 35 mark question, it normally takes more than the allocated time. So if any of your question is taking more than your allocated time, then there is possibility starting that you will not be able to complete the paper, in fact. So due to that mindset, it is generally advisable to cover the rest of the 65 marks first. 65 marks as in the 25 mark question, 20 mark, 20 mark, and at the end come back to the 35 mark question. That could be a possible strategy, a good strategy maybe, because 35 mark question in the start, but you need to make a proper good time management, most importantly. Okay, but let's discuss how to attempt that, because normally in the 35 mark question, there are 4 professional marks normally there. The 5 ethical marks are normally there. So like your hidden 9 marks are already there. So that is, yes, 35 marks, but from a text perspective, that is to be exact a 9 mark stuff. Okay, let's start. I will guide you guys also how to read the question, how to extract the information, and most importantly, those who are attempting ATX as a first professional exam, they have to learn how to manage the 4 screens, uh, 4 screens together, because your information is available in exhibit 1 and exhibit 2. Requirement reading once is fine, and your both of the response options. Okay, so let's start reading the question. Probably I will not be solving to be exact the question, rather I will be guiding you how to attempt the question. Okay, your manager has had a meeting with Maya, a client of your firm. Extract from the memorandum prepared by your manager following the meeting, and an email from her detailing the work she requires you are set out in the exhibits. The following exhibits available on the left-hand side of the screen provide information relevant to the question. An extract from a memorandum prepared by your manager dated 7 June 2002. An extract from an email from your manager dated 8 June 2022. So the first exhibit is memorandum prepared by manager, and second extract is email from your manager. This information should be used to answer the requirements within your chosen response options. Now, in the professional series, it is the candidate, it is the student to decide whether the answer should be on Word or should be on the spreadsheet. Whereas in the fundamental, for a particular requirement, either the word space is available or either the spreadsheet space is available. There is like no gray area from the exam perspective, like where your discretion would work. Either you have to follow the word option or you have to follow the spreadsheet. But here, considering you guys as a professional student, it's up to you whether you want to attend the question on Word or spreadsheet. So examiner expects this thing as well from your side. I will guide you how to choose, how to decide which option to choose. Okay, I will guide this thing. First memorandum, Maya. Maya is 63 years old and has significant personal wealth. She has taxable income of approximately 120,000 each year. taxable income. The word taxable income means this income would have been after deducting the personal allowance, if any, much of which she is able to save. She uses her inheritance tax annual exemption every year and sold a residential investment property, realizing a chargeable gain of 15,000 in May 2002. She is resident and domiciled in UK. She is resident and domiciled in UK. While reading this statement, one thing came into my mind, like whatever income, wherever income she has to pay UK income tax, UK capital gains tax, domiciled in the UK, wherever assets she have, whether in UK, whether outside UK, she has to pay UK IHT on this. So like my scope is not limited, my scope is completely widened. It's altogether open because she is a UK resident, she is a UK domicile. I have to pay income tax, capital gains tax, and IHT on worldwide income, worldwide gains, and worldwide assets. Mahia has agreed to provide financial assistance to her nephew, Josh. Okay, so Mahia is going to provide financial assistance to her nephew, Josh. She already sold a residential investment property, realizing a gain of 15,000. Josh financial position. Josh recently left university and on 6th April 2002, he started working for NL Limited, an unquoted company. He earns a gross annual salary of 25,200. Since 6th April 2002, NL Limited has provided Josh with the use of mobile telephone market value of 650 and a home cinema market value 1700. On 1st June 2002, NL Limited issued 200 ordinary shares to Josh. The share issue was not made as part of tax advantaged approved share scheme, not part of share approved share scheme. So it is like unapproved share option scheme. If the share option scheme is like unapproved, if the share option scheme is like unapproved, then no tax on grant. Whatever will be the benefit, if any, gonna taxed at exercise. The difference between disposal proceed and cost would be made up of exercise price and benefit taxed at exercise would be a taxable gain. Okay. Josh paid 300 for these shares, which had a market value of 2,100 at that time. The shares are not readily convertible assets and Josh is not permitted to sell them until 1st April 2006. So on 1st June, he got a he exercised the share options for an exercise price of 300, where the market value was 2,100. Josh currently receives dividend income of 420 each year. He is resident and domiciled in UK. Again, whenever you read resident and domiciled in UK, all of that point should come into your mind. Josh estimates that from 6th April 2002, he needs 2,500 per month to pay his rent and living expenses. 2,500 per month. Okay. Maya has asked us to calculate how much cash Josh will need for the tax year 22-23 and 23-24 over and above his post-tax income from all sources. Post-tax income from all sources. Okay. Providing financial assistance to Josh, alternative strategies. Maya is considering 3 alternative strategies to provide financial assistance to Josh. Gift of investment property on 1st July 2002. The investment property is currently worth 370,000. Maya purchased the property for 130,000 on 1st July 2011. Since its acquisition, this property has been rented out. This property has been rented out for taxable net rental income of 1100 per month. It is a residential building, but I do not know whether or not it has been rented out as a furnished holiday accommodation. Under this strategy, Josh would continue to rent out the property on the same basis from 1st July 2002 onwards. Gift of shares in Farland on 1st July 2002. These shares are worth 420,000. They represent the whole of the Maya shareholding in the company and constitute 14% of the company's issued share capital. Maya father gave the shares to Maya on 1st May 2002 when they were worth 375,000. The gift resulted in a chargeable gain of 225, of which 145,000 was held over via gift holdover claim. Okay. FAR Limited is an unquoted trading company. It owns chargeable non-business asset, which represents 16% of its chargeable asset. So here I'm supposed to make a bifurcation of chargeable and non-chargeable assets. Monthly cash gifts commencing on 1st July 2000. Maya would simply make a cash gift to Josh of 1,000 each month commencing on 1st July 2000. Email extract. That was the memorandum, and this is the email extract. Please prepare a memorandum for the client files consisting the work set out below. I repeat, prepare a memorandum for the client files consisting the work set out below. Again, memorandum, client files consisting the work set out below. Josh additional cash requirement. Calculate the total additional cash required by Josh over and above his income from all sources for the tax years 22-23 and 23-24 after deducting tax and national insurance contributions. In order to prepare the calculations efficiently, you should think about how Joe's taxable income in 23-24 will differ from that in 22-23. There is no need to provide any narrative explanation of your calculation. Okay. Providing financial assistance to Josh, alternative strategies. In respect of each of three alternative strategies set out in my memorandum, explain the increase in Josh post-tax income for the 21-month period ending 5th April 2024. You should only consider the post-tax income to be received by Josh in relation to strategies 1 and 3, not in strategy 2. There is no need to consider the capital values of any of the strategies, as in the short term, Josh will not realize any of this value. The capital gains tax liabilities for Maya only on the assumption that those reliefs which are available will be claimed. The IHT implications for Maya and Josh, including consideration of the availability of business property relief. As I noted in my memorandum, I do not know whether the investment property qualifies as furnished holiday accommodation or not. You should explain the liabilities for both possibilities regarding this property. You should not provide a definition of furnished holiday accommodation. The question clearly, okay, if I look into this memorandum, email extract, email extract. To be specific, email extract guides me what the examiner wants me to do. What the examiner wants me to do is in the email extract. Memorandum extract is like the data of the question. One of the common feedback from the examiner was, in this question, I specifically asked not to provide the definition, not to provide the advantages or disadvantages of furnished holiday accommodation. But students did specify. Why do we need to do that? Because examiner is specifically asking, no need to prepare that. Well, let's look into the requirement. Prepare the memorandum as requested in the email from your manager. The following marks are available. Josh, additional cash requirement, 9 marks. Providing financial assistance to Josh, alternative strategies. Gift of investment property, gift of shares in farmland, monthly cash gifts. Professional marks will be awarded for the approach taken to problem solving, the clarity of explanation and calculations, the effectiveness with which the information is communicated, and the overall presentation and style of the memorandum. Hold on. Yeah, I was thinking on the same lines. I've muted. Okay. I'm done reading the requirement. I'm done reading the scenario. My relevant screens are 1, 2, memorandum extract 1, memorandum extract, email extract 2. By the way, by looking into the requirement, what do you believe the main element, the majority part of the question is about the word element, like the discussion, explanation, or the mainly it is part of like theoretical like calculative part? What do you guys believe for this question? Just as a feedback. No one, no feedback. Again, my question is, what you guys believe, the majority portion, like in this question, the major portion belongs to calculation or the major portion belongs to the theoretical discussion? Like, I understand there is a mix of both, but in general. Perfect. So where the majority portion or the main portion of the answer is based on theory, in such situation, I advise you guys to write your main component of the answer on the word. Wherever relevant calculations needed, to perform it on the spreadsheet. Okay. Main calculations on the word, and where calculation required, do give a proper reference to the spreadsheet, like I will be doing shortly. Okay, so these are the 4 screens which I need to manage simultaneously. First of all, I need to prepare a memorandum, right? I need to prepare a memorandum. So I'm going to start a memorandum. So like for ethic, for the professional marks, memorandum. Memorandum to, again, why to the client files? Because please prepare a memorandum for the client files. If it is prepare a memorandum for me, then to the text manager. If it is prepare a memorandum for Maya, for example, to Maya. So you need to specify, and this would be guided to you in the question, to whom you are supposed to address in the memorandum, address in the letter, address in the report. If you follow these minor instructions, you will get majority of the professional marks. To, from, by the way, in the from, your manager has sent you an email, right? Memorandum, right? So you can keep any of your designation, but it should be below manager. So you can keep your designation as like tax associate, tax advisor, uh, tax officer, but logically speaking, your designation cannot be more than manager. Your designation cannot be more than manager. So I was, okay, tax associate subject. Can you guys please suggest me a suitable subject of this memorandum? Additional cash requirement and financial assistance to Joe. The date of memorandum. What will be the date? That was, I guess, 8 June. Sorry. That was, I guess, 8 June. Opening line. Opening line. The objective of the memorandum is to calculate and advise on the additional cash requirement by Josh over his income from all sources and and on providing financial assistance to Josh. After the introductory paragraph, now part A. First heading, Josh additional cash requirement. Josh additional cash requirement. Okay. Josh additional cash requirement. The total. Okay, one further thing, as an advice to all of you guys, please take care of the formatting. Like, since considering this to be a professional exam, this thing matters. Considering this to be an professional exam, this thing matters. As in, like, this is my first heading. So I'm putting bold, italic, underline, everything with this. This is my first subheading. First subheading. So I'm putting it, for example, I'm not fixing this. First bullet, sorry, bold only. If there will be any subheading, probably in the underline, probably, or in the italic, up to you. Third subheading, for example, change the format and apply that formatting throughout the question. So these things will support you in grasping majority of the professional marks. Okay. Total additional cash required by Josh over and above and 324 are working one. Additional cash required. Okay. Additional cash required. I need to calculate how much additional cash required by Josh. How to approach this? How to approach this? Any idea? By the way, this is indirectly guided to me in the question. This is somewhat guided to me in the question. How to approach this? Calculate the additional cash over and above his income from all sources for the tax year. In order to prepare, you should think, okay, let me first talk about fiscal year 22-23. For the fiscal year 22-23, he has a salary of 25,200. After the salary, then shares in NL Limited, shares in NL Limited. For the shares in NL Limited, the benefit would be 1st June 22. Like in 22-23, it is 2100 minus 300, 1800. Home cinema usage benefit. Home cinema usage benefit is like then mobile phone exempt. As a result, employment income, then dividend income. By the way, what was the amount of dividend? $420 each year. So dividend is 420. As a result, total income personal allowance and then taxable income. Fine. For this taxable income, I'm supposed to pay income tax. I'm supposed to pay income tax. It is like 15190 minus 420. You can alternatively calculate it as then 420 dividend. This is the income tax liability. Then class 1 NIC. For class 1 NIC, like it is, Josh is supposed to pay. Where is this three? Uh-huh. Okay. Uh, to Agarwal, this 340 is basically the 20% of the asset usage benefit. So whatever is the value of asset, multiply by 20. Sorry, if you guys. So this is the value of home cinema multiplied by the asset usage benefit percentage. Class 1 NIC. Josh is supposed to pay class 1 NIC. Josh is supposed to pay class 1 NIC on his cash earnings. Josh has Josh has cash earnings of 25,200 minus 9,568, the class 1 NIC rate, which would be applied at 12%. So the NIC amount okay. As a result, total tax and NIC cash earning was 25,200. Dividend would also be received in cash. Total cash to Josh amount total cash after tax and NIC. So total cash after tax and NIC. I'm taking a bit pause over here. And if you guys require any kind of explanation, any kind of clarification, please do let me know. I'm waiting to hear from your side. Okay, let's move forward. Let's move forward. This is for tax year 22-23. 23-24. For 23-24, salary remains the same. On 1st June 22, NL Limited issued shares 200 pound ordinary shares to Josh. The share issue was not part. Josh paid 300 for these shares, which had a market value of 2100 at that time. Okay. The shares are not readily convertible asset, and Josh is not permitted to sell them until 1st April 2022. Uh, by the way, would there be any shares element in this year as well? Correct. So I put zero over here because there is no exercise kind of a stuff. Home cinema usage remains the same. Mobile phone remains the same. As a result, if I think the employment income would remain the same, dividend income. Dividend was not a 1 year thing because it is mentioned that 420 each year. Taxable income. Now, uh, taxable income minus dividend amount. So this is my pure employment income, 20%. Class 1 NIC, would there be any change in class 1 NIC? Do you guys believe so? There would be any change in class 1 NIC? Okay, good job. So, uh, in order to, you should know taxable income, there is no need to provide any narrative. Additional cash income from all sources after deducting tax and NIC, etc. I know that the total cash is this amount. Okay. How much cash she required? He required cash of 2500 per month. So 2500 per month. We are talking about a 2 year horizon. So 2 year horizon means we are talking about 24 months. So for a 24 months period, the cash requirement is 60,000. Expected cash after tax and NIC would be over a 2 year horizon. The expected tax and NIC for a 2 year period would be So how much additional cash he required? 18060. Now I will be updating this part over here. The total additional cash required from all sources for the tax year 22-23 after taking account of monthly expense of 2500, monthly living and rent expense of 2500 is 18060 over 2-year horizon. I'm done with this. Is there anything in particular anyone want to ask? If there is anything which is unclear to anyone, please do let me know. Share calculation for 22-23. We can find, okay, so let me answer the first requirement, the first query raised, which is by Kunal. Then I will answer your query, Abdul Qadir. With respect to the shares in NL Limited, we are talking about share options. Share options, and these are the unapproved share options. So for unapproved, Josh is exercising the share options on 1st June 22. The difference between market value and exercise price is a taxable benefit for unapproved share option scheme. The market value is 2100. If you look over here, the market value is 2100, whereas Josh is exercising the shares for 300, right? So that the difference between market value and the cash paid is your benefit, taxable benefit. In which year? In the year of exercise, not in every year. So this 1800 was like taxable in fiscal year 22-23, not in 23-24. I hope, Kunal, that would be clear. Second, in this question, we don't need to fight cash for each year separately. We can do that. I don't mind, like that's not clearly specified that we need to find it out for both years or the additional cash for 1 year. I can work it out in both the ways. Both ways are perfectly fine. And if you notice, so there is nothing much left on this front also. Like cash required, I would have taken it as maybe 12 over here, 12 over here, probably. Um, this minus this. Still the answer would be same. again, both things can work. A good point, Abdul Qadir, by the way. Any further question? I hope I adequately answered to the queries by Kunal and Abdul Qadir. Any further comment from anyone's side? Anyone? No. Okay. Let's start the second part of the requirement. Part B. The part B is providing financial assistance to Josh. Okay. In respect of each of the three alternatives set out in my memorandum, explain the increase in Josh post-tax income for a 12-month period, ending 5th April 2024. You should only consider the post-tax income received by Josh in relation to strategies 1 and 3, not strategy 2. So I'm supposed to consider the post-tax element for strategy 1 and 3, not for strategy 2. There is no need to consider the capital values of any of the strategies, as in the short term, Josh will not realize any of this value. Okay. The capital gains tax liability for Maya only on the assumption that those reliefs which are available will be claimed. The IHT implications for Maya and Josh, including consideration of the availability of business property relief. As I noted in my memorandum, I do not know whether the investment property qualifies as furnished holiday accommodation or not. You should explain the liabilities for both possibilities regarding this property. You should not provide a definition of furnished holiday accommodation. Okay. Here, the main element is about discussion, not about the calculation. Okay. I will be discussing one by one each strategy. Now, this is my subheading. We keep this thing in mind. This is my subheading. Okay. So, and the first one was gift of investment property on 1st July 22. Gift of investment property, right? The gift of investment property will be the discussions will be increase in income. So increase in Josh post-tax income, the capital gains tax liabilities, and IHT implications. Okay. Increase in post-tax. Yes. Sorry. Josh will receive Josh will receive the net rental income of 1100 multiplied by 12 because the monthly rental income was 1100, right? 1100 per month. So which works out to be 11 that's 12,100. It would be 13,200. Josh will receive net rental income of 13,200 in a full tax year. He would remain the basic rate taxpayer. Accordingly, his post-tax income from investment property for 21-month period would be 1100 multiplied by 21 multiplied by 80%. So I don't know whether you guys would be able to see my calculator or not. I like that you guys watch my calculations. 1100 into 21 multiply by 18480. 18480, right? Josh will receive this amount of net property, net post-tax income. Is this thing clear? Post-tax income. Thank you for the feedback. Let's continue. So this is the first aspect, post-tax income. The capital gains liabilities for Mahia only. The capital gain liabilities for Mahia only. Let's start on the discussion of capital gains tax liabilities for Mahia. Capital gains liabilities for Mahia. Okay. CGT liabilities for Mahia. Yes, a suggestion. What will be the CGT liabilities? This is a subheading. So okay, capital gains tax liabilities for Mahia. Sorry. For capital gains purposes, the transfer of uh, Jahanzeb, why is that so? Like, why you commented that? I'm not saying it's right or it's wrong either, but why you said so? The transfer of investment property. I'm just asking, like, you are right at the moment, let's suppose, but why is that so? For capital, the transfer has to be recorded at market value. What's the market value? Purchased for 130, taxable income 370. Accordingly, there would be gain of 370,000 minus 130,000 on the transfer of property. 370 minus 130 is okay. At the moment, am I clear whether it is a residential property or not? Sorry, whether it is a FHL or not? Read this. It's a residential building, but I do not know whether or not it has been rented out as a furnished holiday accommodation. But I do not know whether or not it has been a FHL or not. So probably the comment by Jahazeb was on the basis, on the assumption that this property is FHL. If this property is FHL, then yes, you are right. To Kunal, your answer is correct if this property is not FHL, because FHL property is considered as business asset for capital gains purposes, for IHT purposes, right? At the moment, I don't know. And which is specifically mentioned, as I noted in my memorandum, I do not know whether the investment property qualifies as FHL or not. You should now read this requirement carefully. You should explain the possibility, sorry, you should explain the liabilities for both possibilities regarding this property. Liabilities for both possibilities. Liabilities for both possibilities. Now, I hope you understand where, on which direction, on which dimension I need to mark my discussion. If not building, what's that? If investment property is not FHL. If investment property is not FHL, the property would not be business asset, hence no gift holdover relief or business asset disposal relief would be available. Accordingly, Maya has to pay capital gains tax. Accordingly, Maya has to pay capital gains tax on the gift of investment property to Josh by the amount by the amount to 40,000 multiplied by 28%. And why I am directly applying 28%? Why I am not considering the annual exemption thing? Because she already has gains by the amount 15,000. Remember? Chargeable gain of 15,000. Multiply by 28%, 67,200. If investment property is FHL. If investment property is FHL, then the property would be business asset and gift holdover relief would be available. Accordingly, no CGT would be payable by Maya on the gift. Then the next discussion is on IHT implications. IHT implications for Maya and Josh. Again, if investment property is not FHL, then by the way, the transfer of property would be potentially exempt transfer such that there would be no tax unless Maya were to die within 7 years. If investment property is not FHL. First of all, if investment property is FHL, there would be IHT, there will be no IHT liability if Maya survive for more than 7 years. If Maya were to die within 7 years, the amount exceeding the market value the amount exceed sorry the amount exceeding the market value exceeding the NRB would be taxed at 40%. Taper relief would be available if Maya survive for more than 3 years. If investment property is FHL, it would be considered as business asset such that business property relief would be available. Such that business property relief would be available. If Maya dies within 7 years or after 7 years, there will be no If Maya dies within 7 years, there will be no IHT liability as the PET would have been covered by the BPR. Unless the house is not sold by Josh by that time, in which case would be clawback. I'm looking towards the comment. Uh, Anything which needs to clarify from this? Kunal, again, the FHL property is considered as business asset for capital gains and IHT purposes. So if it is a FHL property, we get gift holdover relief, we get BADR, we get rollover relief from capital gains perspective, and from IHT perspective, we are eligible for the BPR thing. Subject to meeting other conditions, obviously the holding period, etc., etc. But these assets are eligible assets. Anything further which anyone of you like to comment? Um, can I move ahead? Or is there anything which is still requires discussion, clarification from this? To Wahab, it is residential property. Just to share with you, purchase the property. Look, it is a residential building. It is a residential building, but I don't know whether or not it has been rented out as FHL. I hope that would be clear, right? Good. Any further question, please? Okay. For the next two parts, probably I would not be performing the exact wordings, exact calculations. Rather, I would be guiding how to approach that part. Correct. But provided the whole of the FHL property would have been transferred. So just imagine if you are transferring one room of the FHL property, it would not qualify for BADR then. But if you are transferring the complete property, if you are transferring complete property, then yes, it would qualify for BADR. because this is considered as a separate business asset. To Asad, this is practice exam 3, question 1. Practice exam 3, question 1. Okay. Second, gift of shares in Farland, sorry, in Far Limited on 1st July 2022. Not bold, that was underlined. Keep the formatting same, please. Correct. So am I supposed to consider the increase in post-tax income over here? The answer is no, we are not supposed to consider increase in post-tax income, because post-tax income is only for strategy 1 and strategy 2. The capital gains tax liabilities, CGT liabilities. I'm just writing in bullets. I'm not doing the exact thing now because I'm cognizant of the time element. First of all, you need to calculate the CGT liability. The shares, the FAR Limited is unquoted trading company, if I recall correctly. FAR Limited is an unquoted trading company. So unquoted trading company shares are considered as business asset. Hence, the gift relief would be available. But since the company has 16% of non-business asset, so gift holdover relief would be available to a maximum extent of 84%. Rest of the 16% of gains would be chargeable. Do remember that on these gains, there was a holdover relief already claimed in the past. So do remember that you need to deduct that holdover relief to arrive at the gains figure. Okay. Along with that discussion of gift holdover relief from Maya to Josh. Inheritance tax liability. From the IHT perspective, it would be considered as PET, BPR at the rate 100%. Would be available as FAR Limited is unquoted trading company. However, reduced by non-business assets in the company. A discussion on these lines, if die within 7 years, if die after 7 years. Any concern over these lines of capital gains tax and IHT? Yes, my dears, anything which you want to highlight? So no need to perform any specific calculations. You can just comment on these lines. The BPR will be reduced according to the non-business asset percentage. You can simply comment on this. And if you look, I have not mentioned to calculate this, the PET amount. Although I specified for the calculation of CGT, capital gains tax, but for IHT, you need to discuss this part. I hope that would be clear. Income tax implications, monthly cash gift, income tax implications. Need your input over here. Maya was planning to give cash of 1,000 each month. 1,000 each month. Income tax implications. No. No CGT implications as cash is exempt from inheritance tax. No IHT implications as monthly gifts likely to meet the definition of normal distribution out of income. No IHT implications as monthly gifts would likely to meet the definition of normal distribution out of income. because list down the conditions then for normal distribution out of income, like no for normal distribution out of income to apply, habitual, not a one-off thing, would not impact the standard of living. You need to specify these conditions then. Correct. So you need to specify these 2 points in the below bullets. One further thing. So from the professional marks perspective, under the memorandum, we are not supposed to conclude it unless specifically asked to do so. We are not supposed to conclude unless specifically asked to do so. Since not specifically asked to conclude, so I'm not going to conclude it, like to give my conclusion. That's it. End over here. After the second bullet, end over here. Okay. Anything which is unclear in the question, which anyone of you want to ask from anyone of you want to ask? Do let me know, else I'm good to move ahead. Please, if there is any feedback, anything which you require explanation, clarification, clear, unclear kind of stuff, please do let me know. Yeah, I'm heading towards that. That's why I want to close this question first. Same here. Okay, acceptance by silence. So assuming no question, I close this, move to the next part. I'm not going to start it. I'm going to take a 10 minutes break. So 10 minutes break. Let's resume after 10 minutes. Okay. Welcome back. Okay. I like to start from the second question. You should assume that I hope you guys are back from the break. Should I start this question? Thank you. Uh, your manager, thank you for the feedback. You should assume that today's date is 8 March 2022. Your manager has sent you a schedule prepared by Claire Faulkner concerning the company Plaid Limited and a new company Quill Limited, which she intends to incorporate on 1st April 2022. The covering email from your manager details the work he requires you to do. The two documents are set out in the exhibits. The following exhibits available on the left-hand side of the screen provide information relevant to the question. Attachment, schedule from Claire dated 7th March 22. An extract from an email from your manager dated 8 March 22. This information should be used to answer the requirements within your chosen response options. Schedule email. Plaid Limited. I have owned the whole of the ordinary share capital of Plaid Limited since 2007. Plaid Limited trades mainly in UK and is a UK resident company. It purchased components from third parties to be assembled into finished products. It also has a permanent establishment in the country of Czechia. The profits realized in Czechia are subject to 14% Czech-in business tax. There is no double tax treaty between the UK and the country of Czechia. The budgeted taxable profits of Plaid Limited for the year ending 31st March 23 are set out below. Plaid Limited profitability is very stable, so please assume that figures for the following years will be the same. Trading profit in the UK, 48,000. Trading profit in the country of Czechia before deduction of 14% Czech-in tax. So before deduction means this amount would be the gross amount, taxable total profits. Q Limited will be incorporated, registered for VAT, and commence trading on 1st April 22. It will trade in the UK and be a UK resident company. From a commercial standpoint, my intention was to own Quill Limited personally. However, if there is a sufficient tax advantage, I will consider establishing the company as a wholly owned subsidiary of Plaid Limited. Okay. For the first 2 years of budgeted results of Quill Limited are set out below. The trading profit or loss figures are before deduction of capital allowance, but have otherwise been adjusted for the purpose of corporation tax. The chargeable gain will not qualify for rollover relief, and this is before deduction of capital allowances. On 1st April 22, Quill Limited will purchase the following capital assets. New machinery and equipment on 1st April 22. 160,000 excluding VAT. Building used for manufacturing and storage 1.4 million excluding VAT. The cost of building includes 60,000 for land and 300,000 for construction and 1,040,000 in respect of new thermal insulation and air conditioning equipment in order to create the appropriate conditions for manufacturing. Once completed, the building will be brought into use on 1st October 22. VAT, I would like the two companies to register as a group for VAT purposes to avoid the need to charge VAT on intra-group supplies and to generally reduce the administration. And for the group to continue to use the annual accounting scheme currently used by PLAD Limited. I appreciate this would mean that the two companies would be jointly and severely liable for the group's VAT liability. PLAD Limited unreported chargeable gain. I have just discovered that a gain of 21,600 realized by PLAD Limited in the year ended 31st March 2018 and was omitted from its corporation tax return. However, because the gain arose in respect of sale of land, it was reported for the purpose of stamp duty land tax. Accordingly, I assume we do not need to do anything and that HMRC will contact us about this at some point. Please carry out the following work. Group relief. In order to help Claire make a decision on the ownership of Quill Limited, advise her of the tax advantage of Quill Limited being a wholly owned subsidiary of PLAD, such that the two companies form a group relief group. You should carry out this work in 3 stages. Explain with supporting calculations the maximum amount of group relief which PLAD Limited would need to receive if for the year ending 31st March 23, such that none of its DTR would be wasted. You should assume that rate of corporation tax is 19% for all accounting periods. Prepare calculations for corporation tax liabilities of the two companies for the 2 years ending on 31st March 24. Your calculation should be on the basis that the trading loss of Quill Limited will be used as soon as possible, whilst restricting amount of group relief and accounting period to the maximum figure you calculated in part 1. Should not provide any explanation of these calculations. Conclude by explaining the tax advantage of Quill Limited becoming a wholly owned subsidiary of PLAD Limited as opposed to being owned personally by Claire. Conclude. So here you are specifically asked to conclude. So I'll be concluding. While carrying out this work, you should be aware of the following. In the year ending 31st March 23, the whole of the annual investment allowance will be available to Quill Limited, and Quill Limited will claim the maximum capital allowance available. Neither of the two companies will be required to pay corporation tax in quarterly installment. This will be true regardless of who owns the Quill Limited. Okay. Group registration for VAT purposes. Explain any additional matters of which Claire should be aware in relation to group registration for VAT. Explain the PLAD Limited unreported chargeable gains. Explain the implications for PLAD Limited and for our firm of the failure to report the chargeable gain to HMRC. You should not address money laundering or the possibility of penalties, as I have already spoken to Claire about these matters. If I have to look towards the requirement is of 25 marks, 18 marks for group relief, 2 marks for registration, and 5 ethical related marks. Fine. Mainly, there are calculations or there are discussions. Since mainly there are discussions as opposed to calculations, I will be keeping my answer to the word and supporting workings on the spreadsheet. Group relief. Asad, yes, we should, because there is no professional marks, no such thing provided. So no need to consider or emphasize on that front. Okay, let's start the group relief stuff in the first instance. Then we'll talk about further. Uh, Explain with supporting calculations the maximum amount of group relief. Okay, group relief. Maximum amount of group relief. The first discussion in the group relief is around the maximum amount of group relief. The whole of Pledge Limited UK trading profit of the whole of the UK trading profit of 55,000 is available for group relief. My dear, the answer is no. Why 55? Because let me check. Is it a subsidiary or is it a permanent establishment? I have owned the whole of the ordinary share capital. Plant Limited trades mainly in the UK. It purchases components. It also has a permanent establishment in Czechia. So it's a branch in Czechia. It's not a subsidiary. It's not a subsidiary. It's a branch. So branch profits are my profits. I have to pay UK tax on my branch profits. In order to not to waste double tax relief, an amount of Pledge Limited check-in profits should remain subject to corporation tax. Third bullet. The amount of second tax would be lower of always as Checka has a lower rate of tax as compared to the UK tax rate. Then explain with supporting calculations, okay, such that none of its DTR would be wasted and its UK corporation tax would be nil. You should assume that rate of corporation tax is 19% for all accounting periods. Fine. So as an starting point, I mentioned that the maximum amount of loss which can be adjusted, the amount of check and tax would be lower off. Okay. Just to share with you, DTR would be lower off. So DTR would be check and tax of 7,000 multiplied by 14%. DTR would be check and tax of 980. Hence, from UK trading profits, it we can adjust the loss of up to 980 divided by 0.19575158. 5158 without wasting any DTR. Accordingly, if flat deduct the if flat deduct the loss of 48,000 plus 1842. $49,482. Accordingly, Flood Limited deduct the loss of 49,482. There will be no loss or waste of the DTR of check and tax. I'm done with part A1. If there is any question which is unclear to you guys, please do let me know so that we can discuss this accordingly. Okay, let's move towards the part 2 of the requirement. Part 2 of the requirement is prepare calculation of the capital corporation tax liabilities of the two companies for the year ending on 31st March 23 and 31st March 24. Your calculation should be on the basis that trading loss of Q Limited will be used as soon as possible while restricting the amount of group relief in accordance in an accounting period to the maximum figure you calculated in part 1. Okay, if I were to take up this one, this is a purely calculative part. For the part 2 talks about the calculation of corporation tax liabilities. Calculation of corporation tax liabilities. For the year ended the corporation tax liability for this period for Plard Limited would be nil as discussed in two 2024. For the profits, we are to assume that this will remain constant, right? For the profits, we have to assume that this will remain constant. working one, of a spreadsheet. Quill Limited for the year ended 31st March 2023 and 24. Working two of the spreadsheet. I headed towards the working one. Working one, corporation tax liability of large limited for the year ending 31st March 2024. Now, what will be the profit calculation over here? So it's like taxable total profits $55,000 group relief. We will be deciding how much group relief to deduct. Taxable total profit. Whatever is the taxable total profit, corporation tax at the rate 19%, less DTR, lower of UK tax on check-in profits, which are like 7,000 multiplied by 19%. Check-in tax on check-in profits. DTR is lower amount. Corporation tax liability amount. These figures needs to be updated, by the way. Then working to corporation tax liability of Quill Limited. 2023. 2024. Trading loss before capital allowances. 10,500. Double 143,000. Fine. Uh, the first 2 years capital allowance, the chargeable gain will not qualify, and chargeable gain. Okay. Trading loss before capital allowance. So from this, I will be deducting the capital allowance. I will be deducting the SBA element, and then it will be trading loss or trading profit. Then capital gain is by the amount 16,000. Total income. Then there will be some loss brought forward. Taxable total profit. On this taxable total profit, corporation tax at the rate 19%. Capital allowances. From the capital allowance perspective, one column main pool, second column special rate pool, third column allowance. Brought down balance as of 1st April 2022 would be 0 as the business just started. Then the cost of building, construction, thermal insulation, new machinery and equipment. Machinery and equipment. Machinery and equipment is by the amount 160,000 of enhanced capital allowance at the rate 130%. So 160,000 multiplied by 1.3, 208,000. Then the cost of building used for manufacturing storage. The cost of building includes 60,000 for land, 300,000 for construction, and 1040 in respect of new thermal insulation and cooling equipment. Okay. Thermal insulations. By the way, thermal insulation is part of the special rate pool. So that would be recorded in the special rate pool. 1040,000. The first period is of 12 months, right? So AIA would be available. To the extent of 1 million AIA is available, and the amount which exceeds from AIA and rest of the amount would be recorded into the main pool. Just keep remember the period in which AIA is available, sorry, ECA is available, normal capital allowances are not available in that period. So my total allowances amount carried down. So the carried down for one period becomes the brought down for 1st April 2023. This is the carried down for 31st March 2023. Nothing addition, nothing disposal. Capital allowance at the rate 6%. Carried down. So if I were to take care of the capital allowances stuff, the first period capital allowances are by the amount 1128, and the capital allowances for second period amount this is the carried down for 31st March 2024. After this, the SBA working. SBAs in the year ending 31st March 2023. SBA would be 60,000, 300,000 for constructing. 300,000 for construction. So SBA is available on construction only. 300,000 multiplied by 3% multiplied by 6 upon 12. Why 6 upon 12? Because SBA is available when the building is bought into use. Building is bought into use on 1st October 22. Then here it would be 12 over 12. This is the loss amount and this is the profit amount. So gain 0, 0, total income 0, loss brought forward 0, taxable total profit 0, corporation tax multiplied by 19% 0. Total income loss brought forward. How much loss brought forward would have been deducted? Again, probably I need to look for the loss memorandum. Memorandum of loss. Quill Limited has a loss in the year ending 31st March 2023. The loss is by the amount then out of this uh, group relief for March 2023. For March 2023, the group relief was 49482. Then the remaining loss is carried forward. So it's like brought forward to Quill Limited for March 2024. For March 2024, Q Limited has income of 1128,000. 1128,000. So all of the loss would then be sorry, 1148,000. So as a result, if I were to look how much loss is left, 44718. This amount would have been adjusted in the group. Group relief for March 2028. As a result, after a 2-year period, is there any loss remaining? The answer is no. All of the loss has been adjusted. All of the loss has been adjusted. Loss brought forward. I need to highlight this because that's my final answer. And I need to highlight this because that is my final answer. Is there anything which is like not clear as part of the losses thing? Although I need to still conclude it. Yes, and capital allowance for year ending 2023. Perfect. I am heading towards the conclusion. Yes, Asad, your question is, I guess, incomplete. 6% on a special rate pool. My dear, the year in which enhanced capital allowances are available, normal capital allowances are not applied. Keep remember this thing in your mind. Conclusion. Where two companies are in group relief group, as opposed to be owned by Clear, trading loss of 49482 plus 44718. 94560. 94560 would be adjusted via group relief. In a 2-year period rather than carry forward. This is advantageous from cash flow point of view, as this saves the total tax payment of 94560 multiplied by 19%, 17966. To the group, if group relief not there, then this loss would need to carry forward. There would be uncertainty about the relief of losses. So concludingly, like indirectly, we are concluding that it's good that Quill Limited will own the, sorry, that the company will own this Quill Limited as compared to the Clear. The Plaid Limited own the company. Okay. Uh, just to share with you. So I'm not like considering the time. I like to discuss the point B and point C. The group registration for VAT purposes, where two companies which has a shareholding of more than 50% can register as a group for the purpose of VAT. Okay, provided both of them are established in UK and one company controls the other company, or both companies are under common control of an entity. So Plaid and Quill are eligible to register for group VAT, whether it is owned by Clear or whether it is owned by Plaid. Uh, but keep remember, Clear would not be part of the group because group, the VAT group is for companies, not for individuals. Okay. The last discussion is about unreported chargeable gain. So unreported chargeable gain, from that perspective, that's basically about the ethical issue. The company, there are certain implications for the Pledge Limited, and there are certain implications for our firm. What are the obligations for the company in such situation? The company has a responsibility to report this omission to HMRC and to pay the outstanding corporation tax. It will be committing tax evasion, a criminal offense, if it fails to do so. So if it is not declaring that, it's a evasion. HMRC will charge Pledge Limited interest on any tax which becomes payable, and that interest is basically 2.6%, which runs on effectively every day. Implications to our firm, we should investigate how this error arose, and we need to have a look back exercise whether there are such more type of instances or not. Okay, if that's a deliberate action, probably we need to discontinue to be a tax advisor of Plaid, as we cannot advise to the one who is involved in the tax evasion. Okay, and if we were to cease to act for the Plaid, we need to inform the same to the tax authority without disclosing the reason. So, like, honestly, considering the time thing, I discussed these points, these cents with you, rather than looking into very much detail. But again, that was not very much technical as compared to the uh, uh, part A of the requirement. Uh, like honestly, three hours are at times very low for the discussion kind of stuff. Uh, by the way, is there anything which anyone of you want to ask or discuss specifically? I am happy to answer that. Else, considering the time limitation, I have to close this session. If there is any feedback, please do share with me. I would be happy to hear your feedback. No feedback. Mm-hmm. Uh, we'll share that, Asad. Thank you, Abdul Kadir, for the kind words. Really appreciate it. Thank you. Thank you. Yeah, so there is one more session scheduled for tomorrow, which will be conducted by Sir Zia, and he would have uh, some of his own plans to take up to make best of this 3 hours for you guys. So this is the best which I can plan for you guys considering the 3 hours. In the same way, for sure, Sarja would have something in his mind to how he can use his best the 3 hours with you guys. Okay. Fine. Feels like no question, no comments, nothing further. Perfect, my dears. Thank you very much. Feel free to reach out at either Facebook or WhatsApp if you have any kind of query. I would be happy to answer that. Uh, Considering no more question, I'm good to end. And thank you very much from my side. This is what I can make the best use uh, of your these 3 hours. So that's it. I want to say. So see you guys again. If there is if there is any query you want to ask anything, please feel free to ask. Okay. Thank you very much. Take care. Bye bye. Lafez.